Hello everyone, welcome to another of our series of best practice videos. I'm really pleased to be joined today by Gabe Ratcliff, who is from the Investor Relations team at Etsy. Gabe, thank you so much for joining us. It's great to have the chance to speak today.
Absolutely. Thank you for having me.
No, it's brilliant. And we wanted to get you on for a bit of a chat because you actually transitioned from the sales side into investor relations. So to kick things off, I'm really curious to understand your experience of that transition. So what impressions did you first have when you came into investor relations? And what do you think are the skills that you've developed since moving from the sales side to IR?
Sure. Yeah. So I've been at Etsy for about 4 years and about 4 months so far. Came from the sales side at Deutsche Bank, and I'd say that the transition was somewhat seamless. I mean, you go from actually like doing the analysis on companies and writing reports to actually being on the other side and being just one company, and you're utilizing the sell side as a conduit to the buy side. So I'd say that the skills were a seamless transition. One of the skills that I did pick up by being in investor relations was just communication, and specifically the art of telling a narrative and telling a story. I think crafting a narrative is a very necessary muscle for investor relations professionals, and it's something that I don't think gets enough credit, because one of the most important things that not only your management team relies on you for, but also the sell side and investors rely on you to help them understand the narrative of Etsy. And also from several perspectives. People want to know the internal perspective, and also what's the perspective and the sentiment from the other people that you're speaking to. So, having the hard skills is necessary, the, financial statement analysis, the modeling, the understanding of the market dynamics. But I would say storytelling and, understanding a narrative is one of the most important things that I've learned and I use today.
Yeah, no, that's fantastic. And is that something you've used to sort of increase and improve your analyst coverage? Because obviously, again, coming from the sales side and Etsy being a mid-cap company, that's really, really important. So what have you done to improve your analyst coverage, particularly thinking from the sales side?
Yeah, I'd say that it's somewhat. I'd say since joining Etsy, we've went from 8 analysts to about 17, and recently we've had as many as 19 analysts. There were some firm shutdowns and shifts in resources. So as a retail company, we've actually had a good amount of coverage. Our more recent focus has been on the quality of coverage. Getting those analysts who not just follow the quarters and, will put out a report every time you report a quarter, but also think about, when you speak to analysts, understand their perspectives on the company. You want analysts that are going to look at your company and write the more thematic pieces that are thought-provoking and help investors think about the company from a different perspective, or shed light on different perspectives and the future prospects. So that's where we've been focused recently. And it's really on the quality of coverage. And how we've done that is, we either, receive, an analyst will reach out to us to, help understand the company. But, during that conversation, we'll ask them, quite frankly, like, let us know how you intend to, run coverage on Etsy. And, we let them know what we're looking for. And, hopefully what they'll see is there's some gaps in terms of, investors who, not only write on the quarters, but, every now and then write about, more thought-provoking things. And, we try to, speak to those analysts and help them understand that so they can make a decision on if Etsy's the right company for them to cover.
Yeah, absolutely. And that quality piece is really, really important because I suppose now there's a huge quantity of engagements, a huge quantity of meetings, whether that's with sell side or your investors as well. So I just want to dig a bit further into that and understand, well, first of all, how you measure quality in terms of your interactions, but also how you go about improving the quality and making sure that you're making the most of every single meeting.
Yeah, I think that's a great question, and something that I think IROs are grappling with on a day-to-day basis. From my perspective, I think preparation is key. I mean, before every meeting, we should know or have a good idea of the bias of the investor. Are they selling the sector? Are they buying the sector? Look at the peer ownership. Do they own any of your peers? What's the reason why the investor wants to speak to us? And, what are their, likely perspectives on the company? We obviously look at the quantitative metrics, things like, the investor conversion rate, like the number of meetings until an investor purchased the stock, and you can bucket them into, the style of the investor, long only, hedge fund, et cetera. And, we also look at things like the potential position weight in the investor's portfolio, and, many other metrics, the relative engagement versus other, mid-cap firms like ourselves. All of those gives us a gauge on the meeting quality. But what I think is really important is, you also want to make sure you're using a CRM and taking really good notes on the meeting, because most often, either the investor will initiate a position and then speak to the company, or before they initiate a position, they'll want to speak to the company to understand the prospects of the company. And, understanding the questions that they're asking, what are some things that they asked about. You want to make sure you have really detailed notes so that you can refer to those when you meet with them for a second time. What we've seen at Etsy, most often it takes, at a minimum of 3 to 4 interactions before an investor takes a position. So we want to understand within those 3 to 4 interactions, what are all of the things we've covered and what haven't we covered, so that we can cover those. And if, the final meeting, like a check the box meeting, if it's a meeting with management, we'll know going in, like, hey, this is just a check the box meeting. We went through all the aspects of the business, so there's no need to go in great detail there. So, I think that's how we measure and improve the quality of interactions. And it's also a way for us to ensure that we're correctly managing our C-suite's time.
Yeah, absolutely. And bringing in some of those hard analytical skills, making sure you've done the homework so that when it comes to that final meeting with management, as you say, you're making the most of their time. Another big aspect of management time is, of course, the earnings call. And as I understand, you've been particularly involved in an initiative to really reimagine and reinvent the way that Etsy deliver their earnings calls. So can you maybe tell us a little bit about that, about this project and how you've looked to improve your earnings calls?
Yeah, I mean, once, we came to the realization that, COVID was, going to impact our work dynamics, we thought about how can we elevate the interaction and engagement of our earnings call? How can we, be different and stand out? When all other companies are just doing a normal call and normal Q&A, how can we elevate that? And, one of our key strategies as a business is to leverage the human interaction of e-commerce. So, our team, our investor relations team, applied that to the earnings call. So initially what we did is we had a pre-recorded video, so we wanted our CEO and CFO to, provide their prepared remarks live, or not live, but pre-recorded on a camera. And then, we went to live Q&A on camera via a webcast. So participants can, see our team, look them in their eye, and, actually, have that human interaction that they haven't been getting, just given, the dynamics that are currently. So, we've gotten really good feedback from both the buy side and the sell side. And, I think this is something we're going to continue. So, just having that human element and interactions, with investors and analysts, I think it goes a long way.
Absolutely, and I assume that that's good for the management to know that people are engaged with them and
Absolutely.
everything like that as well.
Absolutely.
Fantastic. That's great. And you sort of touched, a lot of things are virtual at the moment, but I want to go back a little bit. And I understand that you were involved in putting together a couple of firsts for Etsy, including the first ever Investor Day, and then also subsequent sort of perception audits as well. So I'm curious to understand what advice you have in terms of putting on that Investor Day. If you could go back and do it again, what would you do differently? What would you do the same? And then a little bit about those, perceptional audits. Any tips on those two pieces?
Yeah, I mean, I think you can, wrap this, wrap both of those kind of into one. They are, what I learned is they're both like huge undertakings, and they take a lot of time and effort and coordination. But they're definitely necessary for an investor to understand your narrative, and for you to get feedback on, honest feedback on investor sentiment of not only the business but the management team. It's very necessary. And I think my advice would be, if done right, it can be really useful and it can be evergreen material. So when speaking to new investors, I probably say, like, at our investor day, 10 to 20 times during the meeting. So, and it's great to keep the narrative consistent, and it also gives them material to go back and, get a refresher on the company, not just historically, but also our strategies and priorities moving forward. So, I would say, think about, like, actually who you're talking to, but keep the, future investor, future conversation in mind, with the thought that, like, you may want to refer to this in a conversation you're having in a year from now. So try to make it, evergreen material. And we've been using it that way so far.
Yeah, absolutely. No, I think that's really great advice. So thank you for that. I just want to shift slightly, and liquidity and adding ownership to people's stock is something that a lot of people would be dealing with out there. So do you have any advice around that? What advice do you have for adding liquidity to your stock?
Yeah, this is a tough one. I think that, liquidity is oftentimes a function of, your market capitalization, your index participation, and the amount of analyst coverage you have. And, obviously the more firms you have making a market in your stock, the more it will impact your liquidity positively. So I think that, delivering, first off, I think that delivering great results and exceeding expectations, being and raising for a string of quarters, will set the foundation for driving, liquidity and ownership. And I think the other things kind of take care of themselves. So, the bigger you are from a market cap perspective, the more indexes you'll qualify for, and, the more analyst coverage you'll have, and that'll drive liquidity. And, that'll also drive, shareholder ownership into your stock. From, obviously the more indexes you're in, you'll get more of the passive investors who are tracking indices. And the more liquidity you have, the more you'll be available to more, hedge fund and long only investors who invest in your stock. So I think it just initially starts with delivering great results and exceeding expectations.
Yeah, great advice. No, that's fantastic. And I know we touched earlier about the importance of management's time, and that's a really key aspect for investor relations professional, is that relationship between IR and the board, or IR and the management teams. And you've actually been involved in delivering some training for company leadership. Can you potentially kind of give us a little bit of an insight into what you've been doing, and important things to remember when delivering training for leadership?
Yeah, I've had the ability to see, a management change and also an IRO change. So, I've been in the shoes of doing the training. And, I think initial insights is just keep it simple, and, keep it high level initially. As you're giving the training, I think there's a bias to just want to, swallow everything, everything there is to know about the company in one sitting. And I think you really just have to get them to understand, whether this is a conversation with investors or we're going to a conference, just help them understand how to, keep the conversation at a high level. If an investor wants to take it in the weeds, keep it high level. I think investors and analysts will understand if it's the first time, you're talking to, a key leader of the company. They kind of want to know the investing philosophy and everything at a high level. And then the conversations will evolve over time to get more into the weeds. So my training always often is, how to shift the conversation to keep it high level and just focus on those priorities, from a high level. So, that's kind of my insight and what I've always tried to impress upon the people that I've trained.
Yeah, absolutely. Don't try and tell everyone everything all at once, because it's a relationship and you've got time to dig deeper when you need to. No, that's
Absolutely.
great. My last question, and again, thanks so much for joining us. But you've definitely been busy this year because you've also helped to create a new IR website for
Yep.
Etsy. So just as a final bit of advice for everyone out there, do you have any tips, anything that you've learned around IR websites and potentially even the use of multimedia through your IR activities?
Yeah, I think, websites come in all shapes, sizes, and forms. I think, one of the things that, going in, you really want to just put yourself into an investor or analyst shoes and think, what information would you want to know from a company and, want to see on a website? And, what we do is we initially try to audit other websites, and to often just iterate and incorporate best practices from other sites. But I think the key element is just understanding, okay, I'm in an analyst's shoes and I'm going to the website. What are the first things I want to see? And what are some things that I should have in the tabs that should be available for that analyst to, from an early level, just analyze, the company. So, I think that's probably the most key thing. And I think websites look different and, it should also reflect your company's brand and, what your company stands for. But initially just understanding the information that should be on that website is key.
Absolutely great advice as always. And thanks so much for joining us as well. It's always great to chat to you. And yeah, thanks a lot and hopefully speak to you soon.
It's been a pleasure. Thank you as well. And look forward to interacting with you guys again.
Sounds great. Thanks, Gabe.
Thank you.